my background in my background in my actual office is very not good, So I figured I'd anyway. So thank
I
you.
like the
I got
bison.
yeah, I had
Is
those
it
made
metal?
for it is. I have a friend who does stuff like that, and I had it who also did the one above it. And I had those made for my partners, and of course, I had to make myself one for after our first Christmas in business. I had those made and gave them to him as gifts. So um,
Very, very cool.
it's a good thing there's not 360-degree view in here because there's so many more trinkets and things in here. You're seeing about 20% of it. It's like a pawn shop.
Which is why your wife commented that way. But I love the view. I love the view that we have. Thanks everybody for joining us today. This is the latest in mortgage today. It looks like we've got a few people still filtering in. We'll give it just another 20, 30 seconds or so and see if that stops. But yeah. Yeah, so we're excited that we're gonna be seeing you soon, Stuart. It's 5, 4, 4, 5. It's 4 weeks away.
No, you guys are coming to my home turf. I'm excited to have you.
I know. We're very excited, and we've been very appreciative of your assistance and guidance of your town. So thank you so much for doing that. With that, I think we'll get going. So this is the latest in mortgage today. It's a space for all of us to just talk about what's going on in the industry, exchange ideas, move things forward together. Our goal is to have a space where everybody has a voice to talk. So please, if you have questions, comments, anything about what we're talking, pop it in the chat so that we can have that interaction with you. Um, Register for your event calendar. It's 2 Fridays a month for us. And super duper lucky today, we have someone, if you just hopped in, you may not have heard this, but we are going to Scottsdale in 4 weeks, which is just really hard to believe. It's kind of crept up on us here. And that is where our guest is from. Today, we have with us Stuart Crawford, who is the founder and CEO of Bison Ventures. Stuart, thank you for doing this for us.
You're welcome. I'm excited to do it, and hopefully there'll be some value that comes out of this. So,
Yeah,
anytime.
absolutely. Absolutely. And when we're in Scottsdale, he's like the resident expert. He's been very, very helpful in assisting us with some things related to the conference. So thank you for doing that for us as well.
Of course, anything I can do to help, and anybody who's listening, if you haven't been, you're gonna have a great time. I was just telling the group that starting in 2 weeks, we have Barrett Jackson right now, which is a huge auto auction. We've got the Phoenix Open starting in 2 weeks, and then we roll right into spring training. Starts the weekend. You guys all show up, so it is an action packed time of year to be in Scottsdale. So you guys are gonna have a lot of fun.
Yeah, it's going to be fabulous. On top of the fact that probably about everybody on here is in the cold today. And I know our temp is -15 right now, with a wind chill that puts it down to -31. Our high is -9. So we are all really excited to be coming to Scottsdale. Even if it is in the 40s or 50s, it will still seem like springtime. So with that, let's get started. So, one of the things that I wanted to talk with you about is something that came up. It was either the beginning of this week or last week. President Trump has issued an executive order designed to restrict institutional investors from acquiring single family homes. And this has kind of been it's been a topic for a while. I feel like it's now kind of being pushed to the forefront again, um, because the thought process is those investors are competing with like individual home buyers. How do you feel about that? And how do you feel like the impact in your market would be? I would imagine maybe it's greater than other places, just because of where you are. But what do you feel like the impact of that would be? And do you feel like that will give a lot of assistance, a little assistance, or it's just another one of those nuggets that helps us get further along down that path?
Yeah, I think it's a great question. I think that it will definitely give us assistance in our market here in Phoenix Metro. As you guys can imagine, we we have a heavy community of second homes, vacation homes. We have the snowbirds, as we call them, which are, everybody coming here essentially from October through end of April when our weather is really nice before it gets really hot in the summer. And it's noticeable, right? I mean, you can tell on the streets when the snowbirds show up, it gets very busy. But that being said, that's a big part of our community, and that because of that, it's a huge investment property community
Sure.
because investors see that, they get attracted to it, and they want to buy rental properties. There's lots of VRBOs here. So I do think it'll give us assistance. I look at it from a community standpoint. Like all of us, I'm a big community person, and I hope this goes down because I think when you have a big institutional investor come in and buy these blocks of homes, well, they're all going to be rentals, right? And so communities don't typically get the roots and the foundation that I think families need in those rental home communities because people are cycling in and out typically, right? So if it's individual homeowners and young couples that are trying to build families or just start a life, whatever it is, I think it's much better to purchase a home, which I know we'll get into. I know that's not easy right now. But I would love for it to happen. I don't see it as something where, because it's not like we're doing institutional loans, right? It's not like BlackRock is coming to Bison Ventures and saying, hey, let's finance a block of 1,000 homes. So it doesn't affect my transaction count. I'd much rather work with boots on the ground families and things like that.
Yeah. I think the pride in your home too, when your neighborhood is all people that own it, I think that the maintenance and everything related to the home also is a little bit different versus somebody owning it and maybe not even being in the same city where it's at. So I see this as a good thing as well. I feel like it's one of those steps, may not move it for a lot of people in some markets, but it's one of those things that maybe pushes it forward a little bit.
Well, and that's a great point because when it is your home, you have the sweat equity factor, right? You care
Right?
about getting the lawn mowed. You care about going to Home Depot on the weekends and fixing up this or fixing up that. And what does that eventually do? That should raise the value of the asset, which raises up
Right.
everybody. So, yeah, I
Right.
think it's
Exactly. Yeah. Also, this came up on one of our working group calls this week, and so I thought I would just ask your opinion about it. Rocket and Mr. Cooper, is that merger changing anything that you're doing when you're selling loans? Have you seen a difference? Are you going to step away if you were working with Mr. Cooper? What do you think the reaction to that is going to be in the market?
I would answer that two ways. I think the overarching 30,000 foot view of the reaction to the market of the ultimate merger, right? Redfin, Mr. Cooper, Rocket.
Yep.
I went to Housing Wire in June, saw those three guys up there talking about it. And my first reaction was, uh-oh, three big powerhouses just got together and they are big on tech. They're going to be big on AI, obviously. They're going to be big on retaining servicing, selling those features to recruiting LOs potentially for, there's all sorts of reasons there I won't necessarily get into. But that was my first reaction was, okay, all the three of the big boys just came together and they're going to give us a run for our money. That being said, the second part is my team and I haven't noticed any differences in selling loans to Mr. Cooper. I haven't heard of problems. Rocket has a really huge presence here in Scottsdale and Phoenix. They've got some major centers here. And so we're sort of used to them, if that makes sense. I mean,
It
you know,
does, yeah.
we're used to them being in our backyard. We're used to, clients having conversations with them. And I say that to say that I'm not hearing or seeing anything that's changed. I don't feel like our consumers it's not like our percentage of people that maybe we lost a deal to Rocket to is really increasing. It just kind of feels the same. So, so at this point, I try to see everything as a positive. Sometimes it's hard, but I look at it like,
Yeah.
great, let these three come together and let's let them spend all their money, which they've got a lot of, and figure out a lot of things that then smaller companies like mine can, pick and choose. Okay, they're doing this, let's do that, instead of us being the guinea pig, so to speak, and wasting lots of money trying to figure these things out.
Right, right. And then take advantage of those things that do impact your business that can help you that they've figured out for. maybe for the whole entire industry, actually.
Exactly.
I like
Exactly.
I like that idea and that approach. I always love it that you always see the positive, you always see the silver lining in things. So one of the other things that have happened, there have been a lot of regulatory things that have happened definitely in our world, and I don't see some of that ending for a while. The Trump administration has taken steps to reduce regulatory oversight. Because of that, we've seen states step in. There have been some conversations and articles posted in the industry right now about what is that doing to the mortgage industry, and are we going back to like 2004, 5, and 6 before things kind of blew up a little bit in our industry and have a lot of people out there that are, throwing the term that was used was throwing out the rule book. Personally, when I read that, I thought, well, how can you do that? Because you still have state audits that are going to go on. And we've heard that like some of the people that were at the CFPB are now employed maybe in the state instead. So, like, what do you feel about that? Are you seeing renegades? That seems like a great term for Arizona. Are you seeing renegades out in your market that are kind of out there doing a lot of things that you know aren't okay?
I am not it's not obvious. I'm not seeing a bunch of renegades. Again, there's always been renegades, right? As long as I've been doing this, I've been doing this
For sure.
since I was 20 years old. So the renegades are always there. There's always the people that are going to break the rules, bend the rules, and just kind of play the Russian roulette game of, am I going to get my hand slapped, right? I think there's something
Mhm.
to a little bit less regulation and oversight sometimes when you're dealing with larger institutions, because when you have larger coffers, right, you have a bigger war chest. I'm not saying they don't care about fines, but it's, if you're a small company, a big fine can be a big deal. Whereas a big company, it maybe not impact the wallet as much. But that being said, I kind of look at this one in three silos. You've got the throw the rule book out for LO comp and pricing and all. That's always a big hot topic. You've got throw
Always.
the rule book out for guidelines, right? Let's start allowing lower FICO scores, higher LTVs, et cetera. Let's be a little bit looser. And the third one is just overall general compliance, things like RESPA, right? How are we treating realtor relationships? What's allowed, what's not allowed? So of those three, the one that I hear the most, let's throw the rule book out on. Not saying anyone's doing it, but they're talking about it. Is the first one? It's the LO comp rule, which all came
For
from the
sure.
2009 sweeping changes, and rightfully so. I started in this business in the revenue world, right? It made a lot of sense, right? It was like, if the revenue on the deal is X, and I need to give a lender credit because Faith is my really good friend and I want to take care of her, then I just get that same percentage of the lower revenue. It's normal business enterprise. It's capitalism, like every other industry. I think that's why we get frustrated. Is anyone else that's out there selling something, they don't have these rules, and they in some ways don't make sense. And the why behind it was anti-steering, right? Well, you have bad LOs that ruined it for the rest of us, that steered clients into the wrong products because they got paid more. That doesn't really exist anymore. So I think the rules did what they were intended to do, but now it's time to take another look at it. And then as far as the other two, as far as guidelines, I don't think guidelines are changing anytime soon. I mean, and I don't know how I feel about that. I think the changes that we made based on that big crash in 07, 08, I think some of them were good, right? I remember being a young man doing 0% down, 600 FICO, no ratio loans for investment properties. I mean, I wasn't smart enough at the time. I'm still not, but I didn't even realize at the time how crazy that was. So the rules are good, and I don't see Fannie and Freddie and who write the Bibles for what we do. I don't see that stuff changing anytime soon. So I personally don't put any thought into that. And then the third one I think is its own other beast, right? As far as RESPA and those kinds of things, I think we're going to battle with that for a while. But I will end with this on this topic. I am hearing a lot of like, the CFPB is blown up. So now, what do we do now? And I've had some people say to me like, hey, well, now that they don't even have the staff to like even look and audit what we're doing. maybe we can do this, that, and this, which is kind of what you're saying. And my staff and I, the way we look at it is, look, we're always going to take the high road, and we don't want to get in trouble, even if we don't like the rules. And the bottom line, I'm circling this back in a long-winded way to your audit question, is I think what's going to happen is all states are going to have to really step up and figure out what is it at a state level that they are going to regulate, oversee, excuse me, and things like that. And we all know the runway for that to even run its cycle from thought to do this to actually execution, that is going to take a long time. And so I think most leaders are kind of just sitting like me going, until I know more about this, I'm not going to change a whole lot of things because I run a business. I have employees. These people count on us for their families, and I'm not gonna put us out of business because I feel like being the renegade, even though being a renegade is fun.
Exactly. Exactly. I do feel like there is a different environment. I too was in, although I wasn't a youngster, when all of that happened. And I worked with brokers back then, and it was a mass exodus. But I feel like those were individuals that at that point in time were people that were really steering away from the intent of people getting a mortgage. And I don't feel like we have that anymore in the mortgage industry. We just don't see it the same as you did back then.
And frankly, we went through two cycles where we washed those things out, right? We went through the first big cycle in '09, and then we just went through another one. It's still kind of happening, right? The last 4 years have been brutal. And so people have left the business, and anyone looking to make the quick buck, you can't make it. It's hard work. So
That
yeah.
is true. That is very true. I hadn't thought of it that way, but yeah, there have been a lot of either mergers and acquisitions or people just exiting because they're not getting out of it and moving on and doing something else because the opportunity wasn't the same for them there. Well, let's talk a little bit about like hot topic in the industry. It definitely will come out in some of our sessions while we are in Scottsdale. Artificial intelligence. As a matter of fact, we're having a debate, which everybody, if you're at our conference, you definitely need to check in when the debate is going on. We're having a debate that is whether you're all in, hybrid in, or whether you don't like AI. So that should be a lot of fun to hear different people's feedbacks in those different tranches. But I would love to hear from you, like what you're doing in your business related to AI and kind of what impacts you've seen to your business.
Yeah, another great question. Obviously, a hot topic. I will make one comment before I answer your question on your, classifications: all in, hybrid, don't want anything to do with it, or don't like it. Somebody very smart said something to me that I keep thinking about, and I'll share it, which is AI is not going to replace people. It's going to replace people. AI is going to replace people that don't use AI, right? So it's kind of like it's here. We better get in front of it. So my partners and I have thought a lot about that, and we put a lot of time and resources into just educating ourselves, right? It's a Mount Everest to climb, but what we're
every
doing
day.
Every day. I mean, and I'm behind the curve compared to my other two partners, Ryan and Jeremy. They're way ahead, and I'm just letting them run with it. And then they fill me in, and I'm just like, my mind gets blown. But I will tell you that when I look at AI, if you look at the entire client journey, right, I've always seen it as two sections. You got the upfront sales process, right, which is client comes in. How are we nurturing the relationship, cultivating that, build trust, know you, like you, trust you, right? And then getting to that pre-qual stage. And then there's the second phase, which is the operational transaction stage, right? Which is like, now I'm under contract. What's that behind the curtain assembly line look like? And I say that because we're focused much more on how do we use AI on the first stage, right? I'm more interested currently at spending time and resources on how do I impact our loan officers? How do I help them get more business? How do I give them more time back for their families? And how do we all grow on that upfront side? Because we're in the mortgage business, guys. If loans aren't coming in, this back end doesn't exist. So I'm going to focus on filling this funnel up here.
True.
And frankly, it's more fun, right? That's my way I'm wired. I'm more wired on those processes up front. That's, kind of what we did when I was growing my origination team. That being said, what we are doing. So on the operational side, we of course have AI now. I mean, we're doing things as far as underwriting. A lot of you have heard of Candor, systems like that. The second one that we are doing is we have been piloting a program. It's called Fellow, that came to us probably about a year ago, and I spoke with the founder of it, and it was interesting. It was built for real estate companies, and they started thinking, what about mortgage? And so we've been one of their pilots for that. And what that does is it's kind of like, it's not necessarily a CRM. It's an automated database where we put all of our people in there, all of our LOs closed loans in there. And then what happens is the AI starts tracking the conversion rates of who's opening the emails, right? Where are the eyeballs? And then based on what they're clicking on, right? Whether it's like, what's my estimated home value, things like that. It's then learning how to communicate with them and what the next one should be. So it's customizing the conversation and the content without us having to think about it, which is like what we all did back in the day, right? So that one we're still learning, but that's one thing we're using. And again, these are all on the ops side. We do have something we rolled out, Guideline Guru. I know a lot of companies are doing things like this where it's like the AI chatbot that is constantly learning. And we had one before that was really good. And now we've developed kind of a different one where as loan officers and salespeople or sales support or whomever, right? Ops people as well, if they're trying to plug something in and say, well, what can I do for this client? Here's the parameters. It'll start spitting out not only what the guidelines are, but like many of us IMBs, we sell to lots of different servicers. So it's a complete chess game to navigate the jungle of which servicer, which rate, where do I place this client? And it starts telling you that. It says, okay, these are the guidelines.
Oh, nice.
This is your best pricing. So it's really cool. And that's really new. So that's all operational things happening now. On the sales side, the part I talked about earlier that I'm passionate about is for the reasons I told you. Kind of our big goal is there are ways now, and some of you may have seen the things online, but what we want to do is have all the technology talk based on one phone call transcript. So Faith is the client, and I just did a phone call with you. We call it a discovery call, going through your app or whatever, just talking about what your goals are. I want to be able to take that AI transcript, plug it into a system that then connects to all my other systems. So it connects to my CRM, Salesforce. It connects to Encompass, my LOS. And it's also connecting into like our marketing feed, right? So, and Mortgage Coach. Sorry, I wrote this down to see if I missed anything. No. And so what example would be, instead of in the old ways, right, which we're kind of still doing now, instead of me getting off that client call and then sending something through my CRM or an email to somebody on the team saying, hey, here's the conversation. These are the 5 action items, right? Go build this in Mortgage Coach. Go tell this person to go order a VOE. Go tell this person to do this, update Encompass. That's all easy, but it takes time. Even though each of those things takes 10, 15 seconds, you add them up and you start doing volume, it does take time. And so the idea is one action creates 5 actions, right? Is a simple way to put it. It's like, I just did a phone call with you, one transcript, I send that to one place, and it tells my CRM to tell my people this, this, and this. It tells Mortgage Coach to do this. So that's what we're focused on, that because we want to. I'm a big believer, because everyone hears me say this a lot, but I come from a loan originator background before I started the company, and I have to see everything through the lens of the LO, because that's who I am. That's where my heart is, right? And I can't not. But that's what our salespeople need. They need us to see it that way and say, what is it that makes you move 10 times faster and grow your business? And let's be honest, salespeople are not always the best at being organized and disciplined and building spreadsheets and doing tasks, right? And so It's like, okay, so why are we fighting this? Let's just let them sell and build relationships and figure all this stuff out for them. And I get in heated debates about this. There's other owners that you're like, wow, that makes salespeople lazy. And I don't necessarily disagree with that, but I've coached enough people to know if you want it worse than they do, it's a waste of your time. And you can lead 10 horses to water, and the one that always drinks it, that one's going to be fine. But the other nine, you might as well just help them and push their head into the water, right? So, like, I don't know. I don't know if that made sense, but
Does. I look at it as taking advantage of their strengths and finding a way, a solution. I was in sales for 30 years. I happen to be one of those really detailed people, though. So I'm like the oddity, I think, because I think that the tasks that you talked about, like having be automated, are the things that those individuals usually hate doing. And so sometimes they probably don't do them, right? They kind of skip that part. So I love the idea of doing that. That's made my brain spin a little bit about some things that we do here as well. So love that idea. Is there obviously this is part of your strategy for 2026. And the things that like, do you feel like there are certain roles within mortgage that because of how fast AI is progressing and the things that are happening, do you feel like there will be a shift in kind of like what some people's jobs are going forward?
I do. I'm not under this premonition currently that it's like going to replace everybody and everyone's going to be
I
robots.
don't
Not saying,
either. I don't believe that.
not saying that couldn't happen, but I think it's just an enhancement. It's like I said earlier, either you're going to use AI or you're not, and you're going to be behind. And it's all about everything is about approach and vision, right? And so if you're going to shove an AI article in front of your processor and say, "Hey, AI is going to do all this for you now," and that's the message. Well, what are you going to think if you're empathizing with the processor? They're going to think, "Uh-oh, this is stage one of me not having a job." Okay, that's not good. The other way to approach it would be like, "Hey, this is awesome, Faith. Check this article out. Here's what my vision is. I would love to take all these minutia tasks off your plate, and then I'm going to free up your time, and then I'm going to think of even better things we can do for your highest and best use to impact this company. You're going to have more fun. It's not going to feel complacent. You're not, you know what I mean? Like, I just think there's a different way to go about this. And I think the people that do it that way are going to find that they're going to kind of rally their troops around them with technology, because anyone who's ever led, or you learn very quickly, and we're all guilty. I'm guilty, right? People don't like change. It's human nature, right? Being habitual is human nature. And most people don't like change. So as soon as it's just like if you recruit an LO, right? They're used to going into one kitchen, the forks are here, the knives are here. Then they come to your company and it's like, "Hey, we actually have a different kind of blender that's really cool, but you can't even get there to realize that because the forks and the knives are on the other side of the kitchen, and you're like tripping out about it," right? So it's like you got to get people to understand change is good. And honestly, I'm a big fan of getting out of your comfort zone, and that's where that really is where growth happens. And I feel like that's kind of a cliche thing to say, but it's true. So
Yeah. Well, your team is really lucky to have you because I think that is a great approach in approaching people. If they understand why something is being done and how it's going to impact it, it becomes a little less scary than just having it thrown at you for sure. Let's wrap up here by talking a little bit about millennials. They've been talked about a lot. There was something that came out this week that 51% of millennials would only consider taking out a mortgage if it came with an interest rate lower than 6. This was a survey that was done by Clever. Um, how do you feel like that's like really valid, or do you feel like circumstances put people in different places where to me, rate isn't always the only deciding factor, right? But do you feel like millennials are only looking at rate? And what have you seen in your business? Do you believe that's true?
um, I don't necessarily think millennials are the only demographic only looking at rate. Everybody's looking at
Ah,
rate. So, I mean, it's just like everybody wants the best price. I want the best price. So I don't necessarily think there's a ton of weight there. I think it's more the combination, it's the obvious that home affordability is not good, right? Prices have skyrocketed. I mean, look at Scottsdale, right? We've had a huge influx to the Phoenix metro over the last 10 years of people, let's just say from California, right? Because California is extremely expensive. So you could buy the home of your dreams in Phoenix for 30-40% less than you could in California, where you couldn't even remotely afford that. And so big influx of people. But the negative to that is I see it in my neighborhood. I mean, some of the spec homes going up in the luxury market, what these things are selling for, I'm sitting there going like, what? So, it's expensive here now. It's not the discounted deal anymore. It's cheaper in California. No offense, California, but it's not what it was. So we know that's happening across the country. And I think that's the bigger thing. You start looking at down payments. But we know the calculation is home price up, interest rates up. I mean, if you look at tracking the 30-year fix from whatever it was in the 1970s, the average rate over all those decades, I think was like, I know someone's going to go fact check me on this, but I think it was like 7.5, 7.8, right? Over all those decades. Well, where are rates now?
Yeah.
They're lower than that.
Lower.
So it's the math, right? So I don't know. I think it's the other piece to that people say. I don't know if it's true because my kids are younger, so they're not home buyers yet. But you hear kids don't want to drive cars now. Kids don't want to buy. No, I shouldn't say kids. Young people. Young adults don't want to buy homes. They don't care, and it's like, I don't know if that's true, but if it is true, I would love to know the why behind that. And the why is probably because they're not educated on the benefits of holding that on your balance sheet as an asset over decades, over time. But for all I know, I could give them that talk to my kid, and they might be like, don't care, Dad. I just don't care. Like, that's not what's important to me. And by the way, if that's not what's important to you, I'm fine with it as long as you're happy. So
I think it's just a big mix. I have a early 30s child who bought their first home when they were 26 years old. And honestly, I didn't know if they were ready, but it's been the greatest wealth building thing that they could have ever done at a very young age. So, yeah, but it was when rates were low too. So they had a little bit different entree into buying the house that they wanted to be in. But I think there's a mix out there. I don't ever believe that it's one way or the other. There is a mix somehow in there.
And it's also it's risk appetite, right? When you're a young person like that, you're taking a big risk buying a house. Our home prices can go down. They're going to go up. And I'm going to pull all this money out of my account I've been saving for 5 years. Like, oh my gosh. But there are statistics around if you take calculated risks time after time again, you typically will win in the long run. It's not a guarantee. But to your point, there's very few arguments that say you shouldn't buy a house, or there's basically not any, I don't think, if you're going to hold for the long term. So I think it's just education.
Yeah, for sure. We're at the bottom of the hour. We're actually a little bit past. Thank you so much for doing this with me. We appreciate you, and I absolutely cannot wait to see you in Scottsdale in about a month. For those of you who haven't registered for Scottsdale, please hop on and do so and come join us, because you're going to be able to have great conversations like we had here today on a bunch of different topics and with a lot of different people who are very, very knowledgeable, just like Stuart is. So appreciate you, Stuart. Thank you for doing this. Cannot wait to see you in about a month.
You guys, safe travels, house party at my house. We'll get the kegs out. We'll get it done. So anyway, thank you guys. Appreciate it. Have a great weekend.
Thanks for joining us today, everyone. Come back in a couple of Fridays and join us for the latest in mortgage today. Bye, Stuart.